All right, here we are, joined Mike Taylor, broker owner with Red Door Property Management, and as you all know, business development manager here, Chris Knight, also with Red Door Property Management. It would be weird if I was from another property management company, but here we are, both from Red Door. We're trying something new here. We've got a new recording studio that we're using for these podcasts, trying to make it a little bit more visually appealing for all of our viewers, and this has kind of come at a request from a lot of our viewers. If you're not jumping into those conversations, you absolutely should be. So jump into the comment section, let us know what you think. I'm anxious to hear your thoughts on these market reports as we continue to expand the markets that we are that we're going over, and just excited to hear from everyone on how you're finding this helpful in your journey into deciding whether you're going to put your property up for rent or whether you're a new investor to the market and you're just trying to expand your knowledge. So here we are. We're gonna jump in. Mike, any thoughts before we jump over to the first market report?
No, you're a lot bigger though than I remember last month.
That's funny. That's funny because when a second ago, my chair, it was like started sinking on me. I don't know if your chair ever does that. So I had to raise it up, and all of a sudden I was a foot taller. So I don't know if that's just me, but I am a bigger person all of a sudden.
Oh, that's funny because my chair broke, and I'm actually in a dining room chair today here. So
fancy! Wow. The lengths that we'll go to without the proper equipment to make sure that we get these videos out on time.
Yes.
A dining room chair. All right, let's jump over. I'm going to excuse some of the mess ups here as I share screens and stuff. That's part of the learning process, but I think I've got it down at least at a amateur level. Here we go, jumping into our Indianapolis market report. Sweet, what a layout! I love it.
Love
Mike,
fancy, man. Super fancy, this new software.
I know. Hopefully we're still in the free trial month, but we'll see.
Yeah, we got to talk fast because we only have a certain amount of time that we can do.
Exactly. Yes, we are on a time limit and go. What do you think? Indianapolis market. This is we all know, and if you've watched any of our other videos, this is an extremely popular investor market overall. Yep. Everyone wants to know what's going on. If you're in tune with these market reports, you're ahead of your average investor without a doubt. So what's going on? What's going on in the Indianapolis market?
Well, honestly, not much in a good way, not a bad way. And if you read anything investing real estate now, especially right now, and specifically in single family, but also multifamily, there's a bunch of chatter out there about how the Midwest is doing much better than the rest of the nation, even the Sun Belt areas like Florida, Texas, Arizona, because it just continues to be steady. And those other areas, when they get hot, but when they cool down, man, they really cool down. And so it's the old tortoise and the hare. And here we are, Indianapolis, we're the tortoise. We just keep on going, keep plugging along. So honestly, there's nothing like earth shattering here, but it's just we're just plugging along. And it is down a little bit. So the average rents are down slightly year over year. But again, we think that's kind of part of that reset from kind of those all-time highs that we had last year.
Exactly.
So average rent $1,350. That is down 3% year over year, but up 3% month over month. So trending in the right direction. Active homes 2,080. That's actually a decrease in supply. We'll take a look at that here on the next slide. But that's heading in the right direction. And I think the biggest thing to talk about for Indy is average days on the market. This has been super volatile over the past 12 months, and look at that, it's heading significantly in the right direction. So it's down 3% year over year, down 20% month over month. So heading in the right direction. And again, this is, we're recording this in March, but these are February's numbers, which is typically either the worst or the second worst month to rent a house out in Indianapolis market just because of seasonality. It's just cold. Sometimes it's snowy. So to see 58 days on the market after what we had this past year is encouraging. I mean, 58 days is not fantastic by any stretch, but for February and with what we've had, I'm pretty pleased with 58 days on the market.
Yeah. I mean, I think it's a little bit of seasonality for sure. I mean, last month we saw 72 average days on the market. It's trending down. It's beginning to fall into its correction. You know, people are starting to get realistic about their pricing.
Yeah.
So I do think it's starting to average out. And honestly, a lot of the average days on market, I'm beginning to take, as we follow more and more of these market reports month over month, I'm taking a little less stock in this average days on market. Now I want to kind of keep that mindset as we go forward and see if it kind of correlates with what we're talking about. But the average days on market is also going to pertain to a lot of your sole investors out there that aren't under management, aren't decreasing their prices, they're holding strong at $200-$300 over market value. I mean, we deal with these people on a daily basis, and we have to educate them a lot of times. So those are really skewing the average days on market numbers, without a doubt. At least that's kind of my my hypothesis at this point.
Yeah, and the other thing is where we pull that data from, right? So we get that data from MyBoard database, and that is in Indy, there's a good amount, but as you get into some of these submarkets, it does tend to get a little bit less because not as many property management companies list their homes in MyBoard. We used to, for example, and now we don't anymore. And so, who's putting those in there? That is typically then your average realtor who may not be as focused on days on the market. This may be like a gig for them, kind of a side project. Like this is all we do every day, and like we're hyper focused on our days on the market, and so we're looking at that, and that's important to us. Whereas, if this is like, hey, will you list my home on the market or on the MLS? They maybe don't care if it goes vacant for 2 months or 3 months. So I don't know, just consider that as well. Probably contributing to what might be a little bit higher days on the market than what we're experiencing.
And I'm so glad you mentioned that. And I'm gonna go into this a little bit further here, and I don't want to hold on to Indianapolis market too much, but this is very valuable information. Is a lot of the new investors that I'm talking to, and let's face it, I mean, there are a lot of new investors to this market, right? Every day there's new investors pouring into this market. And what I find that I'm constantly having to, and I want to do this, I want to educate them on the front end that as they're acquiring a new property, it's important that they have all their pieces in place before they make a purchase or they acquire a property, because they need all the information. And we saw this the other day, Mike, where we know that a new investor picked up a property, and the numbers that they were using to estimate the value of the property was from Zillow. And sometimes Zillow can be pretty accurate, right? But not always. And in fact, in this one case, that the Zillow was suggesting over $1,000 price difference on what would obviously be market rate. So they acquire the property hoping they're going to be able to achieve what Zillow estimates, and that's just not the case. So what I just want to make sure is important is that as you're beginning to acquire properties here in the Indianapolis area, that you have all of your team in place. You need to have a realtor who's familiar with the market, understands and can help you acquire the property, but you also need to be in conversation with a trusted and experienced property management company like us to help you run a rental analysis, set the right expectations before you're actually acquiring that property. Hopefully, if you have the right team, all that information can flow pretty quickly, but you need to have that team set up and then acquire your property. And the ones that I encourage to do that and that follow that recipe, they tend to be much more successful instead of just hoping that they can just do it on their own without having a somewhat of a team in place before they acquire property. So I just wanted to get that out.
No, I 100%. And Chris, it's a great real life story that happened this week, is that property where we ran the analysis, and it was literally, I think it was $1,200 difference than what really the market was. And it was, it's those homes down in, I forget if it was Broad Ripple or Meridian Kessler, where it can vary quite a bit. Zillow is a tool. It's a tool that we use, but it's not always right. And so it's important to get that professional with real market knowledge on there. We had that market knowledge because we had that place rented, and we had a days on the market and how long it took to rent before, all that kind of stuff. So yes, just to echo your point, it's so important to get that professional on your team.
Exactly. Yeah. Okay. Well, enough about that. Let's get back into the market reports. in another video, you can listen to us kind of ramble on about what we shouldn't do. But let's go over the numbers here. I'm gonna skip slides. Here we go.
Yeah. We just go back real quick. Let's just talk about average sales price again. I know I always harp on this, but got just so affordable. $231 is the average sales price. Again, if you're a new investor, that's a very attractive price point. Even in the Indy market or Indy Metro, I mean, you'll see as we get to Westfield, Fishers, and Noblesville, it's significantly more than that. So that's a very approachable price point from an investor's point of view. So 231 heading in the right direction, both year over year and month over month. Again, just the tortoise just slowly creeping up every single month. So and there's plenty of those. We had 730 of those sold the last month. And again, these are all home sales under 500,000. We cap it at that 500 just to look at it from the investor's point of view.
Exactly. Yeah. And just a little bit more on the Indianapolis market is the gentrification that's going on. It's been going on for years, but now it's starting to kind of take a turn where the gentrification is actually making a difference. You know, in your street by street. And then I don't know if you heard, and I feel like maybe we mentioned this in the last podcast, but so stop me if I'm just regurgitating here, but the new Indy 11 stadium that's going in downtown. Did you hear about that?
I have heard about that. I don't think we talked about it, but I have heard about that.
Okay, so they broke ground, and I have very limited information on this aside from it's going into the downtown area. I'm excited about it. They have broken ground on it, so I can only imagine what that'll do to values, let alone the tours potential in the downtown.
Have you seen any of those renderings? It looks really cool.
It looks amazing. It looks so cool. I wish I had one here right now, ready to share. I would share it right now. That would be cool.
Yeah, it looks super cool.
Yeah, it is. It is really cool. So,
I'll just go over these two briefly. We kind of already touched on them, but active homes on the market. So the top red line is 2024. Gosh, it's almost mirroring exactly what happened in 2023, like almost exactly. We have slightly more inventory than last year, but heading into February and a little sneak peek of March, looks like we're going to get a decrease just like we did last year. So, less supply is always a good thing. And then we touched on this last time, but you can see what we were talking about. If you haven't watched these before, last year was a wild ride for days on the market for Indianapolis, peaking in June, which is totally contrary to everything normal at 124 days. So that's why I was fairly excited to see it at 58 in February. So that's the good news. That's why I'm so excited for the days on the market in Indy.
Absolutely, and I expect this to be very similar. In fact, I know because we did a little bit of show prep here, so I know what's kind of coming up here on the next couple slides. But I mean, look, you like you said, last year was out of whack, and I feel like we're going to be able to report a little bit more accurate numbers on what it looks like kind of year over year. So it's going to be fun. It's going to be funny to kind of go over how we compare this year to last year's wild ride. Okay. All right. Let's move on here. Fishers. All right. I know everyone that's watching this has been completely in tune with my emotional states when it comes to Fishers.
Like a roller coaster is what you are. You hate it. You love it.
I hate it. I love it. And right now I got to tell you, I'm kind of in the middle here. I like the average days on market. I know on the previous slide I'm kind of hesitant to rely on that as much because I don't see that it exactly mirrors what we experience here at Red Door. So anyway, I'm fine with. I love Fishers. It's a great market to be a part of. Great schools, great quality applicants. Typically a very low vacancy rate. You have tenants that will stay for a couple lease terms at a time. It's a great market to be a part of, and not only that, it's a great appreciation. Fishers has done a great job of expanding the downtown area. It's a great market to be a part of. And then if you're looking at the median rental price over time, I mean it's trending up, right? I mean, who doesn't want to be? I mean, I wouldn't want to climb this hill. It's not Mount Everest, but it's still not an exciting journey up, But unless you're an investor in this area, then this is exciting, right? I mean, our median rental prices are trending up. They're starting to level out here come March, and our median rental price is over what it was the previous year. I mean, so that's excellent. Active homes in the market were up 5. It's almost identical to last month. So we're only up 5 additional active homes on the market, so that's pretty stable. Average rents, as we just indicated, is at $2,100, which is up exactly $100 or 5% from the previous month. Now it's the average days on market, and if my previous statement on the previous report might be true, then this is kind of I don't want to say a false figure, but kind of a misleading figure. And I'll continue to talk about that as we do market reports month over month. But 52 average days on market, which also I don't want to act like that's something to be super scared of, because it's not, right? If you're in tune with the market, you're in tune with what's going on, you're beating this for sure.
And I got to remember, this is February's data. So 52 is not crazy for February.
Yeah, exactly. And you know what? I'm going to just jump. Let's just see. Average days on market here in our second slide. Quickly seeing that we are way under where we were last year. So again, hopefully a more stabilized market data set that we're going to be portraying here month over month. But really, this is great. I should be jumping for joy. We're down 52. Last year, we were at 83 average days on market. So I'm not worried. I love Fishers. Look at Fishers if you're in the market. Again, it's a little bit higher of an investor point of view price point to get into. I'm gonna go back to the previous slide here as we jumped ahead. But average sales price from your investor point of view, so we don't track anything that sells above 500,000. And there are, of course, homes in the Fishers area that are going to sell above 500,000. But in your investor point of view, they're going to average out about 339, which is up 2%. So it's pretty stable, and it's up. That's no surprise, and I would expect that to trend up as the selling season, which we are quickly approaching. Number of homes sold, 52. Also, I expect that to trend up. We're up 52 from 46 the previous month. So average rents ticking up, average days on market. If you have a good property management company, you're not too worried about that.
Hey, Chris, just before you go off that slide, let me just make one point on the middle slide there, the median rental price over time. So this is, if you look at that light blue line, that is 2023. So we have all of the year's data. I would say that's a fairly typical year where you see it kind of like start low in January, peaks in June and July, and then kind of dips back in November and December. So I would say that's kind of like normal-ish. We haven't seen all that always in all these markets last year because it was a wild year. But just kind of a pro tip here is that when we get homes that come up for renewal in February, March, we're always looking to push those people to May, June, July cycle so that you can really optimize your rents. Because if you look just at seasonality alone, on average, if you rent your home in 2023 in Fishers, you're going to get roughly $2,000 a month. If you wait till July, you're going to get $2,200 a month. That is just seasonality. That is a 10% swing just based on the time of year when you rent it. So if you are doing this correctly, just by shifting your renewal cycle, you can add to your return on your investment without putting any money or doing anything other than just saying, hey, do you want a 16-month lease or an 18-month renewal? So just wanted to comment on that, how much of a difference that can make.
What an excellent point. And in fact, we should mark this as that would be another great video to add.
Yeah.
How to maximize your rent simply by intentionally adding another month of vacancy or something, something along those lines. How much you could really pay off.
How to add 10% to your bottom line without spending a penny.
Yeah, by adjusting your lease start date.
Yep.
Love that. What great advice. Yeah. Thanks for sharing that. That's awesome. All right, I'm gonna move along here. We're on our second market report. We're gonna take up our viewers' whole day.
Oh, we're adding so much value. Geez,
that's true.
$20 a month.
Good point. All right, we kind of touched on these already, so not much to speak on here. So we're gonna move this along. Active homes in the market. We're up. Active homes, of course. There's a lot of new construction going on in this area, as well as the Noblesville market, which is just north of this, which we're about to get into. And everyone knows I love that even more than I have ever loved Fishers. Sorry, Fishers. Okay, here we go. Noblesville. Now, you can judge by Mike's sound alone. It's not going to start off great, but I think we're going to finish just fine. All right, I'm going to lift you right back up. Look at this nosedive on the median rental price, and really it's only looking so doom and gloom. You know what? I am mad at our producer for allowing this nosedive to be in here, because this is a sneak peek into March. And sir, we're here to talk about February, okay?
Okay. February does look good.
Yes, February looks great. We'll talk doom and gloom next month. Noblesville, don't worry, I got you. All right.
Yeah, no, everybody needs to sell their Noblesville properties right now before the market report gets out in February.
Yes, yeah, and I mean, you know, we laugh because I mean it is funny to see this kind of a nosedive, or what appears to be a nosedive. I mean, what are we looking at? We're looking at about a $50, $60, $70 price difference. I mean, it's not exciting.
And you know what? Honestly, it's exactly equal with last year. I mean, it's just like January and February were really good in Noblesville. And so maybe it's evening out. I'm not sure, but it just looks drastic.
I know it just looks drastic. So don't freak out. But anyway, in February, you can quickly see our average rents ticked up another 2.5% from January. We're at $1,900 as an average rent in the Noblesville market, with an average sales price, as far as your investor point of view. Keep that in mind, as we have clearly labeled here all homes that are under the $500,000 price point. Which really, I mean, Noblesville's got a few of those that are over that, but I mean, this is pretty accurate, I think, for the Noblesville market, if you were to ask me. But $341 is your average sales price for homes that are selling under the $500,000, with an average rent at $1,900. That looks really good to me. If you have an experienced realtor in the area, you should be able to get under that average sales price, of course, and still be able to secure a really solid average rental price for the property that you're looking at. Active homes in the market, 121, very consistent with the previous month. We were at 118. Average days on market. Now again, look, I don't want to be hypocritical. I know in the previous couple market reports, I want to take this, you know, with a grain of salt until I really get a handle on these average days on market that we're reporting. But 34 average days on market. Let's go. This is amazing. I'll take this one. All right. I love it. 34 average days on market. Last month, we were looking at 32 average days on the market, up 6%. Who cares? That's only 2 days. What an amazing market to be a part of. Man, what do you got for me, Mike?
I mean, Noblesville is such a good market. It's always been attractive to investors. It typically was a lower price point. It's creeping up now, but gosh, it's just such a solid market. It's every time we get a home in Noblesville, it's so typically easy to rent. It's just a great market. Like you said, days on the market, 34 in February. Amazing. I mean, I got nothing negative to say about Noblesville. I think I love Noblesville too.
Yeah. So, and not only that, and as we start doing more and more of these market reports, I'm going to try to work in more Airbnb data. Because we are an Airbnb property management company as well. We've been growing that over the last 12 months. And Noblesville, to me, screams like a great Airbnb market to be a part of. It's close enough to Grand Park to get some of that runoff, I think. It's got the Ruoff mortgage amphitheater down there. It's freaking awesome. So I think we're going to get some of that play. And then your entry point into this market is also affordable. So I think for an Airbnb play, I think Noblesville is a great place to be looking at for that, to even increase your potential on returns. So I like it. I like it.
Totally agree.
Okay. All right. Active homes on the market. We're seeing a higher than we were last year. Duh. There's a lot of new construction going on. It's an expanding market, which also there's an appreciation play. I said this last month. In a lot of these market appreciation play, Fishers, there's still an incredible appreciation play, but Noblesville, I think even more. They've got a lot more room to grow in the Noblesville area. They've got room to grow as far as their downtown. I know that they're starting to look into that a little bit more, like a lot of these suburbs are. So as that begins to expand, they have a great school system. Appreciation is also an excellent investor play here. But active homes on the market, no surprise to me whatsoever. We're higher than we were at a point from last year. Days on market, well, I mean, I already shared most of my opinion with this. It's amazing. And if you look at it in comparison to last year, it's super amazing. I mean, let's see when we get into March and April what it does. I mean, last year, our roller coaster year, 95 is what we were looking at when we got into April. Let's see if we do that this year.
Yeah. You know what's funny is Becky and I were driving around Noblesville, and we're like, do you remember? I don't even know if you remember this, but this is way back in the day. Noblesville used to be called, they used to call it Noble-Tucky because it was so far and so like.
Really?
Yeah.
Noblesville was so far, huh? Wow.
Noble-Tucky. Now it's like, were you talking about room to grow for appreciation and things like that? That's what made me think about it is, yeah, I mean, it is, those days are long gone. It is up and coming, and there's room to grow there for sure. It's no longer Noble-Tucky.
Yeah, that's kind of what we're going to talk about as we get into our new market report this month in Anderson, and how that's also, right? So I mean, let's kind of bleed back into that a little bit, how Anderson is also continuing to expand, and how soon it'll be the Noble-Tucky. Is that what you said?
Noble-Tucky, yeah.
Noble-Tucky, or at least it is the Noble-Tucky now, but it soon won't be. Rather, that's interesting. That's interesting, and also something to keep in mind as an investor. I mean, that's how real appreciation and growth can play. So I mean, if you're looking at the Anderson market, I don't want to skip ahead too much here, but that's an important point, and how quickly Anderson can become the new Noblesville.
I totally agree. I think that's, and again, I don't want to jump too far ahead. We could talk about Anderson when we get there, but I think that's what's happening is it's just slowly pushing him as population expands and people look for more affordable homes, whether to buy or to rent. I mean, and you'll see that in the numbers as we get to Anderson. I mean, the average rent's going to be less than Noblesville, and so I think Anderson's up and coming for sure.
Yeah. And before we go on, I just want to try this real quick. This is supposed to be daydreaming. I'm daydreaming about Anderson expanding.
Yes.
Okay, I don't think that's daydreaming at all, but that's my opinion. All right, moving on. Westfield. All right. Here you go. Take a rip.
Yep, this is my favorite. And I mean, you can see why. Look at this average rent, $2,400, up 4% from last year, up 11% from last month. I mean, this does not stop. It is unbelievable. This market is crazy. What does not make sense is average days on the market is 84. That is wild.
I think you're going to jump on my train any second. I'm waiting for it. I don't know how much I'm relying on that.
You know what though? I mean, honestly, I don't know. It doesn't make any sense to me. It doesn't make sense to what we see when we run a home in Westfield. I don't know. It doesn't make sense because supply is going down, rents are going up. I mean, I don't know. Who cares on that one? I'm just saying, who cares? I think it doesn't matter. This market is ripping. It continues to rip. I mean, $2,400 a month. If you bought a home a year ago, 2 years ago, 3 years ago, you're laughing all the way to the bank as these rents just continue to push up. So I love this market. I think it has a great play in terms of rents going up, in terms of appreciation going up. This to me is a good 5 to 10 year hold for anything you buy in the Westfield market. So I love it. I own homes in Westfield. Love it, love it, love it, love it. Average sales price still super affordable, $363. I mean, it's more than Indy, but I think you're going to see much more appreciation. There's so much more happening there. What did they just announced something else? I was like, I got to talk to Chris about that. What was it? It'll come to me, but it was another major development they announced in the Westfield area. I mean, they're just more and more coming to Westfield.
Interesting. I'm curious on what's happening there. Yeah. So I'm gonna jump in here a little bit, and I mean, we've seen in the median rental price over time, right? That graph, man, they're looking squirrely. They're looking, and this one is like straight up and then curves straight over. I mean, this is weird. It's like almost by design almost, but. I mean, your active homes, it's shocking. You have less active homes on the market than we did last month, where we're at 129, but yet our average days on market. And in case anyone's going to miss it, it's hard to miss because there's such massive numbers. But right below 84, you're going to see it's up 150% from last month. I mean, that is laughable. It's hard not to laugh on that. And then, of course, up 320%. So this tells me on the next slide here, we're going to see the exact opposite of what we've been seeing in some of these other market reports where our average days on market were under the previous year, right? This is obviously going to be a complete off. Yeah. But you're right. Go. Well,
on the next slide here.
Sorry, Mike. Sorry, I'm going to hold on. I'll give you your time to speak. 2,400 average rents, and then your average days on market at 84. But also, surprisingly, and let me know what you think about this. Average sales price is down 1% from last year and down almost 3% from last month. Talk to me.
Well, yeah. I mean, I'm looking at the kind of the historical data. I will say the sales was just kind of an off month for whatever reason. If we had the same historical graph for sales data that we do for days on the market and for active homes, you would see the trend is up. Like for example, the month before was 374, 380, 383. So actually, you're right. It is ticking down. But I'm so hyped on Westfield. I think there's so much potential there. Again, this month or this quarter, it doesn't faze me even kind of. Westfield is like heading, and so, you know, whether there's more inventory and driving prices down 1% or 2%, you know, I'm not looking at this quarter or even this year. Yeah. I'm looking 3, 5, 10 years down the road. Yeah. And this doesn't concern me at all. That's my time horizon. So if I was going to sell this year, maybe I might be concerned. But I'm not. My time horizon is much longer, and my outlook is totally sunny and bright. And this doesn't bother me at all.
Yeah, that completely makes sense. And just to my last thought here before we go on to the next slide is I'm wondering if at some point you're gonna jump on my emotional roller coaster that I am with Fishers. I don't know. We'll just see.
You know, I mean, at a certain point, it's got to top out. When and where, I don't know. I'm still a buyer for Westfield right now. I can tell you that.
All right. Sounds good. Westfield, active home.
We kind of already touched on these, but you know what's great is the active homes are going down. I mean, there was, you know, what happened in January, but geez, everybody put their home on the market in January. 129 versus 57 from last year. Like, whoa. But trending in the right direction, and you know, down to 107, and then we're seeing it go down even more in March. So supply is trending in the right direction, and then we got that wacky days on the market of 84. And if you look at that kind of back into last year, that almost is at its peak from last year, which was in July, which is, you know, I don't know. Days on the market is wacky. So I don't put too much stock in it.
Yeah, I completely understand. It's so strange. I'm gonna slide back here just for a second. Number of homes sold. Okay, so 67 homes sold, and we were at 60 last month. Active homes, man, that completely makes sense, right? There's going to be 100 compared to 69 last year. There's a lot more new construction, and as there are in all these areas. But your days on market is shocking. Okay, grain of salt.
And I mean, days on the market is a lagging indicator, and so, you know, maybe that's a reflection of, I don't know what happened in January. Like, why is there more than double of the number of homes on the market in January of 2024 versus 2023? That's shocking. And maybe that's what we're seeing in this 84 days on the market, is for whatever reason, there was a ton of inventory. And so it just took a while to get through it. And so maybe that's why we're seeing that 84, because that 84 is a lagging indicator. We're seeing that for the inventory in December and January. And if the inventory is going down, in theory, we should start to see the days on the market go down as the months go on.
In theory, right?
Yep.
Yeah, we know those don't always correlate, but yeah, I completely agree. All right, I'm ready to move on. You ready?
Let's do it.
All right, here we go. Anderson. I like Anderson. This is kind of a mutual market for Mike and I, but I'm going to take the reins here. But Anderson, I like this for the kind of the reasons that I was indicating when we were over on the Noblesville market report. I mean, I think this is a great area to be paying attention to. And the last time we covered Anderson, I kind of shared those exact same feelings. Even so much that I think I'm going to try and talk Mike into making this part of our normal market reports, month over month market report updates, so that we can track that data and how this grows. There's the calls I take every day from new investors. They're looking at Anderson and for expected reasons, right? I mean, we're going to jump right all the way over to, we're going to skip the median rental price over time. It's ticking up. It ticks down $50 from March as our sneak preview. I'm not overly concerned about that right now. I want to get a handle on the market. The average sales price, I mean, look at that. Is there even a home that sells for over 500,000 in Anderson? I don't know. This
that's
might actually be the average sales price in Anderson, right?
Maybe an apartment complex.
Yeah, exactly. Maybe an apartment complex. But with the way that Indianapolis is expanding its circumference, its coverage, and these suburb areas, Anderson is being brought right into the fold, which tells me or leads me to believe that there's going to be a tremendous appreciation play. There's going to be also Anderson University is there, right? And I'll have to look into and see what kind of growth that they're kind of projecting as well. I want to see what they're doing as far as their programs, if they're trying to develop those, because that'll obviously kind of correlate to the demand in this market. But your average rents at $921, which is lower than I would prefer if I'm getting into a market, but I think it easily obviously correlates almost to your 1% rule, closely to your 1% rule is your average sales price, which, I mean, you don't see that anymore, that's for sure.
It's certainly a lot closer than you're going to find in Fishers, Noblesville, Westfield, by far, for sure. And that's why it's this emerging market. But I mean, I think that's also why people are attracted to this market, because I mean, what is that closest to? Probably Noblesville in terms of what we report. And what was the average rent? $1,800 in Noblesville. So I mean, you're literally half. So if you're looking for affordable housing in that area, it's an extra 15-minute drive, something like that. But to save half on your monthly rent, that's attractive. And to be able to pick up a home at $150 as an investor, that's also super, super attractive. So I mean, affordability, in my opinion, is the name of the game in Anderson. And just to speak a little bit, you kind of said, well, what's going on with their economy? I haven't done a ton of research. This is a little anecdotal, but I think that the demand that we're seeing in Anderson is just from the indie market spreading out and sprawling into the Anderson market. I mean, Anderson had a tough go of it. I don't know how long ago it was at this point, but when the Chrysler factory, some factory shut down. So they kind of been a little bit depressed in terms of the economy. And so I don't think we're seeing anything organic yet come out of the Anderson economy per se, but that's okay because Indy is pushing that way. So I'm not looking to Anderson to generate jobs, I haven't seen anything like that on the horizon yet. But that's a possibility. And I think, going back to your dreaming music, I can see where that average sales price goes from 150 to 2 to 250 to 3 in the next 3, 5, 10 years. So I'm liking Anderson.
Yeah, very well said. Exactly. I think it was GM. I think that went under.
Yeah, GM.
Yeah. So I know exactly what you're saying. And yes, and I love kind of your theory there that Indianapolis job market is going to play into the Anderson market. And again, I want to get a grip on what Anderson University is doing there. And if that continues to go right along with it, wow, man, the potential here. And Noblesville, I think, is the closest market as it relates to Anderson. And as we know, Noblesville rather is expanding like crazy, and it is inevitable, in my opinion. It's a strong theory, but inevitable that it's going to bleed into the Anderson market. I'm going to keep an eye on this. One thing I'm doing now is I'm pulling new properties that come onto the market, the sales market, and I'm running those. I'm trying to correlate with the current market rent price. So that's something I'm in tune with almost on a daily basis right now. And Anderson is where I'm consistently still finding anything that's even close to the 1% rule that I mentioned ago. So there's a lot of good potential there, a lot of properties that we're pushing towards to investors right now. So if you're new to this market, stay tuned. Anderson is probably where we are going to be touting pretty heavily over the coming month.
Yeah, if you're looking for affordability and a little bit of I don't know the right word, but looking to have maybe a little bit of a riskier play, not risky, but it's not like you're speculating just a little bit. You know what I mean? Like it's coming. You can feel that it's coming. Whereas in the other markets that we work in, Westfield, Fishers, Noblesville, I mean, those are so safe. They're not going anywhere. you're not going to see any sort of huge price dip or anything like that. So it's like it's coming. It's a little bit speculative, but I think that the payoff is going to be there. If again, and I admit I've said this a couple times, but I think it warrants to say it again. And I think in real estate you have to have a longer time horizon that you're looking at things. You know, if you're worried about this quarter or this year, you're never going to be successful in real estate investing. You need to be worried about 3, 5, 10 years down the road. What does this investment look like? And to me, this plays into that 5 to 10 year thing, where in 5 to 10 years we're talking about this is the new Noblesville, this is the new Westfield.
Yeah, I certainly could see that as a possibility without a doubt.
Yeah.
All right. Well, stay tuned. Let's see. Well, let's not leave off this graph here. Active homes, which is a little bit of short on data here, short on data points, but as you can see, limited data next to last year, 2023. We're looking at 102 active homes in the market, which we don't have our active homes in the market for this month, although I think that was kind of left out. Didn't you kind of track that down?
That was totally my fault. I just, for some reason, missed that. I'll tell you right now, it's 126 is what it is.
Okay. So you have more active homes. Man, I would love to track this. I can't wait to track this and see where it goes. And so our average rents, let me also just mention this, because I didn't go over box by box like I typically do when I cover these. But I mean, your average rents are up 5% from the previous year, up 2.3% from the prior month. I mean, those are solid numbers. So although like Mike was indicating there, a little bit, I don't even know if risk is the right word, right? You're going to be able to see it in this market.
Yeah, it's not.
Yeah. The only huge advantage that we're potentially theorizing or projecting here is that you could see an even more glamorous return on this potential investment. Okay.
Yep.
All right. Days on market. Looks like we're correlating pretty close to the previous year. Stay tuned on some of this data as we try to include this on a month-to-month basis, and this will be fascinating to track. I'll be shocked if it doesn't quickly excite me the way Noblesville does.
Sure.
Okay.
Well, sure. Yeah, let's start tracking this on a monthly basis. I think this is up and coming, and I think we got to start tracking Anderson for sure.
Nice. Well, that concludes the markets that we got to track this month. Anything else you've got to add? I kind of like this setup. I think this looks good. I like the way it's recording. We even got some sounds we're going to play with. I'm going to get a little creative with as time goes on. So hopefully I don't annoy our viewers, but I like this.
I love it. I tell you, it's getting warm. I'm getting super excited for leasing season. Man, it's going to be great. I'm thinking this year might normalize a little bit in terms of the data, but I'm just getting excited for leasing season. I'm just getting excited for it to be warm.
Yeah. And I got to tell you, I mean, just talking about all these markets and kind of what we're currently seeing, I would imagine we're going to see a lot of these owners that aren't going to want to sacrifice their 2.5% interest rates, and that this is a great option for you guys to really be looking at on what else can I do with my property? I'm moving, but gosh, I got 2.5% interest, which I'm convinced we may never see again. Don't let it go. Put it on the rental market. And also, I've got to mention this as well, and this has got to be clipped for a later or a nice little reel on Facebook. But if you're looking for, you need to follow my advice there. You've got to put your team together. If you're a new investor to the area, you've got to find a realtor to work with, and you need a property management company to bounce off a rental analysis and use that information as you're acquiring new properties. And if you don't have a realtor that you're already working with here in the Indianapolis or surrounding suburbs, reach out. I'll be happy to connect you with an agent that works with other investors currently within our portfolio. But we have all that information. So reach out. I'll be happy to connect you, get your team together, and get you moving a lot faster than you would otherwise. So make sure that you take that serious.
Yep, agree. And it's important to find the right realtor to work with, because not everybody understands from an investor's point of view what they're looking for, return, that 1% rule. You know, some people know what that is, some people don't know what that is. So it's important to find the right agent who kind of understands it from an investor's point of view.
And you're absolutely right. And as we start to close out here, I've got to mention one other story, because you're absolutely right. It's important that you find the right agent. And this speaks to even more. And I'll try to control my excitement here, but it's a little shocking. I spoke to a new investor the other day. She was under contract to buy 2 properties, was working with a real estate agent, and just so happens that we were managing the property that she was under contract. We weren't managing at the time. It was one that we previously managed several months prior, but and she was under contract to purchase this property, reached out to me for management services and kind of ran by the property addresses. Anyway, long story short, the property that she was looking to acquire, she was under the impression that property was going to rent for $1,600 a month. And that was a red flag to me, knowing that we had previously managed the property just a few months prior, where the property was only renting for $900. Well, she had a lease and everything that apparently proved, and I just had to caution her. And to me, that's something that the realtor should be able to catch on. If the realtor's not catching that, you've got to be reaching out to a property management company who's going to have experience in the rental rates before you acquire a property. She almost made a drastic mistake, in my opinion, and could have ended up losing a significant amount of money. So anyway, you've got to put your team together. Yeah,
don't believe what you read. Don't believe those pro formas or the rental estimates that people send you. Do your due diligence. Reach out to a property manager and check all those boxes.
Exactly. All right, Mike, this was awesome.
Cool.
Thanks for jumping in here. Like, subscribe, do all the things. Share our stuff. Let us know how we can improve these podcasts going forward. Let us know what you think of this new streaming platform. So far, I got to tell you, I'm kind of liking it. I've only played one Daydreaming soundtrack.
I can't believe you contained yourself to only one.
Yeah, exactly. I know, it's tough. I know. I was really just kind of zoned into the data. So this is cool. We'll see.
Awesome.
All right, check out our other videos.
All right.
Red Door Property Management. Like and subscribe. We'll catch you guys later.
See you next month.